Hey, hi everybody, it's Mike from Orderflows and welcome to today's presentation on digging deeper into order flow. And in this training, I'll be talking about making sense out of the flows, the flows that come into the market. Market's always trading and it's not a static organism. It's a constantly evolving um, environment that understanding what is happening in the order flow is going to help you understand what's happening in the market and make better trades. I'll be talking about advanced order flow analysis. And lastly, I'll be talking about how to find edges and opportunity within the order flow. That's what everyone always says. You have to have an edge in the market to be successful, but then, they never teach you or really explain how to find your own edge. And I'll be talking about edges that I use in the market, in my trading, in my analysis, and hopefully you can take some of that away and apply it to your own trading. Now, why order flow? A lot of people think that order flow is a new thing. It just sort of happened in the last, the last 10 years or last 15 years, but, it's really not. Order flow analysis has been around for a long time. And, one of the greatest books on trading by, what people consider one of the greatest books. If you ever read Market Wizards, a lot of the guys that are in Market Wizards says, the book that had the most influence on them as traders is Reminiscence of a Stock Operator. And the trader inside that, he was someone that read the order flow. He was a tape reader. Right? We used to call them tape readers because in the old days, guys would be in the broker's office watching the ticker tape. That was a form of order flow analysis. And what makes order flow different than other forms of technical analysis is it gets you as close to what's happening in the market right now. You're not looking at a moving average that's smoothed over, the last 21 periods, 50 periods, 200. You're looking at what's trading right now and making decisions based off of that. You got to understand how the current trading activity, what is happening right now in the market, how that's impacting the market, and how it's causing the market to move. Right? And lastly, order flow gives you an edge over other traders by seeing things that they just don't see, right? A lot of traders aren't looking at the order flow. And, imagine, to me, I explain it to people like, imagine playing cards with, your group of buddies, but you're the only one that's able to see all their cards, right? They can't see your cards, but you can see what they're doing. Imagine how that would improve your card game, but imagine it in a trading sense, how that's going to improve your trading. It's almost like, if you play sports, right? If you play football or basketball, having the other team's playbook, so to speak, you could understand what they're going to do next because you understand how they are playing, just as, understanding how traders are going to react based on what they're doing right now. And best of all, you can make this happen without past trading experience, right? You don't need to sit in front of your screen for 10,000 hours trying to figure it out. I'm going to show you how to do it really easily. You don't need big mathematical formulas. Now everyone thinks, oh, I could just solve the markets using math. Well, you can't, right? Otherwise, the markets would have been solved a long time ago. You don't need complicated technical analysis, right? You just need common sense. You don't need macro fundamental analysis. You don't need to know what the weather in the Ukraine is going to do for the wheat crop and how that's going to affect wheat exports, et cetera, et cetera. You don't need that. You don't need algorithmic trading tools, right? You don't need to sit down there and do all this coding and spend hours and hours a day at the machine trying to come up with some algo to solve the markets. And you don't need programming skills, right? Because I'm going to show you, how you could look at the market based on software that's already out there. Now, for those of you that are new to one of my presentations, my name is Michael Valtos, right? And I've got over 25 years of professional trading experience, okay? But I just, I'm not doing this, to sort of put myself up on. I just want you to understand where I'm coming from and why what I say makes sense is because this is what I did for a living, right? I traded with order flow at these firms for a long time, right? I started on the CME floor with Dean Witter Reynolds back in the early 1990s, right? I left the trading floor when electronic trading started becoming a thing, right? Because before it was just like, no one really cared about what was happening overnight. But I saw that the future was going to be electronic, and I left the floor. I think it was in 1995, and I started working up on the electronic trading desk at Dean Witter. Eventually, I left there to join EDF Man, which is a big English trading company. Right, they've been around since the late 1700s. After that, I left there to join Commerzbank in Chicago as a licensed Eurex trader. Right, back in those days, to be able to trade on Eurex, you needed a license from the exchange. And it's a big thing. It's not like this simple Series 3 or Series 7. This one's more intense, right? You got to do all of this, answer all these questions about options and all that stuff. Math out to the third or fourth decimal place, not just choose simple multiple choice. It's very complex. After Commerzbank, I was there during September 11th, and after September 11th, I took about 6 months off, sort of reassess my life. And then I joined Cargill in Chicago. Cargill is a big U.S. commodity trading firm, and it's a private company, so not a lot of people have really heard of them unless you're a farmer, because they account for about 30% of grain exports, about 25% of wheat and of meat exports, livestock. But they trade everything imaginable around the world. And when the exchange in Singapore was closing, Cargill wanted to set up a off-the-floor trading desk, so they sent me out to Singapore to set up their trading desk. And then after about 2005, the part of Cargill that I was working for got sold, and I joined JP Morgan in Singapore. I was vice president of futures trading. I spent 8 years there, and it was literally on the trading desk trading. I'd come in at about 5:30 in the morning for the 6 a.m. Globex open, which was the 5 p.m. reopen of Globex, and I would be there until about 5 in the afternoon, which by that time London was already open and we could pass our trading book over to London. And I left JP Morgan in 2013, and I just wanted to trade for myself, right? I wanted a better quality of life. I didn't want to spend all my days in the office, all my hours. I had a family. You get to a point where, if you're successful, if you're good at trading, you can trade for yourself, right? And I was at that point in my life, I was comfortable being able to support myself in trading. And I started writing a book on trading with Orderflow. And eventually, the software that I was using with Orderflow, I wasn't happy with, right? I wanted something more of the software. I wanted the software to do some of the analysis for me, so it would free me up to do other things, either look at other markets or other time frames, as opposed to being glued to one time frame. Okay, and eventually in 2015, we released our Orderflow software because a lot of traders that I was talking to were seeing my software and saying, hey, can I get a copy of that? And it was really just a modified version of a footprint chart that I was using for my own self, but other traders wanted it, and that's how the orderflows.com website eventually started. Now, this is not about me though, right? It's about showing you how order flow can improve your trading results quickly, to get you from point A to point B as quickly as possible. Now, if you stick around to the end, I told you, right? I wrote a book on trading order flow. I'm going to show you how to get a copy of it for free. It's going to be a download copy. You're not going to get a copy of the hard version, but you can download it. It's 150 pages and print it up. Now, the charts and tools that I use in this training are generated from my Orderflow software, but what I'm showing you today, you can apply with other Orderflow footprint software, but you have to know what to look for, right, in the footprint. That's what I want to talk about today. But you'll be able to see how quickly and easily you can apply Orderflow analysis to your trading to make better, more informed trades. Now, just brief disclaimer, please understand trading involves risk. Don't trade with money you can't afford to risk. Making sense out of the flows, right? When people talk about flows, there's sort of two schools of thought, all right? Some people will say, well, actual order flow is what's traded on the time and sales, or some people will say, well, no, you got to watch the depth of the market to see the order flows. Well, they're both right in a sense, okay? When you look at the time and sales, right, the one on the left, that's what's actually traded in the market. The one on the right, the depth of market, just shows you the orders that are working, on the bid or on the offer, which is constantly changing. People are constantly pulling their bids, moving them up or down, changing their offers, adding more, taking out some. It's constantly changing. but the dome, the depth of market, really just shows you the intentions of traders, right? Because, we used to have this, well, there is this phrase, cancel if close, right? Sometimes you see a big order in the market and the market starts slowly getting there, and then boom, it just disappears, right? The person canceled it as it got close because, maybe they're trying to sell it at 33.40, but the market starts ticking up. We're trading a point lower, market starts trading 25s, halves, three quarters. All of a sudden, the person trying to sell it at 40s, well, I could sell it better at a half, right? And they move it up. So it just shows people's intentions as opposed to actually what's traded, right? What's trading, what you see going through on the time and sales. But the time and sales move so fast, faster than the dome moves. The average trade in the E-minis is about, two contracts more or less. So you can imagine every trade that's going through, you're seeing 1 1 1 2 2 1 1 2 2. It's very difficult to make sense out of. Now, most traders view the market with candlesticks, okay? And there's nothing wrong with candlesticks. I used to use candlesticks, when I was beginning to trade, right? Because I thought candlesticks were the greatest thing ever, honestly. I can see, wow, it gives me a visual representation of what's happening in the market, different than just a normal bar chart, right? Nowadays, especially, people are more visually attracted to things, right? You look at Facebook, you look at Instagram, and those things, right? You just scroll right through it. It takes you, you can process a picture rather than, trying to read a whole post like you would read on a blog, right? And if you can see something very quickly, like a candlestick, yeah, that makes sense. However, you're missing out a lot of the information, right? Order flow traders, right? They're looking at what's trading on the bid, what's trading on the offer. You're still looking at a candlestick chart, right? Because you still want to know what the price action is doing in a bar, but you also want to know what's being traded at price. Okay, and it's important to understand what's trading at a price, because if you've ever run a business, right, if you ever sold anything on eBay or Etsy or Amazon, I said, or you have your own business, you understand that how you adjust your inventory, you adjust it based off of what you sell at prices, right? For example, right, if you're selling the new iPhones, right? Say you have a source to get the new iPhone 12s at wholesale prices. Okay, and, I don't know what it is now, $1,000 or something they're selling for. You start listing them up on Amazon or eBay, and occasionally you sell one for $1,300. Okay, well, you can't sell all at $1,300 because you have other people also selling it, right? So you're going to adjust your price down, 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 closer to where the market is. And that's why it's important when I say, order flow gets you as close to the market as possible. You can see what's trading, how much is trading at a price. Okay, because yeah, we would all like to, if we're all selling iPhones, we'd all love to sell them at $1,500, $1,300. But the reality is, maybe you're going to get one or two trades up there, right? You're not going to be able to sell them, right? And then everybody else is selling them at $1,200, and you're sitting there like an idiot trying to sell it at $1,500. You're just not going to be able to sell any. So, you have to take into account where the market's transacting at. And time and sales, you can see that, right? But it's moving so fast when you're looking at the market. And, you could be looking, you could have, several hundred trades going through in a second, and you're just not going to be able to really digest what you're seeing there. The depth of market, it moves fast, not as fast as the time and sales, but the depth of market is almost like watching a slot machine, right? It's like having a slot machine on your desk, because you're seeing the bids changing, the offers changing, getting bigger, getting smaller, orders coming in, trades going up, jumping up, price jumping up 2, 3 ticks, moving down 3 or 4 ticks, and it's just moving around so fast you get excited, and honestly, it leads to people over trading sometimes. Because they see the market moving, oh, I got to participate, I got to participate. Now, order flow, right, the volume footprint takes all that information on the time and sales and on the dome, and it puts it into a nice, easy to read format, right? What good is having all that data if you can't make heads or tails of it, right? It's it's pointless, right? But now you can, right? You can take all that information, format it into useful information, right? You have new data points, which we'll be talking about in a second, but The footprint chart, the order flow footprint chart, allows you to see current value, allows you to see market weakness, lets you see support and resistance when there's market sweeps coming through the market, when there's imbalances, right? Everyone talks about, markets move from, are basically two forms. They're either in balance or they're out of balance, right? And it's going to be important to know when that's happening, when the market is out of balance, because when the market's out of balance, that's when it's moving. Market exhaustion, right? You got to know when traders, when the last trader has bought, when the last trader has sold, right? The market is just, it can't move anymore in that direction. Aggressive trading. Aggressive trading is actually what moves the market, right? When you have people lifting the offer or selling into the bids. Divergence, right? When price and trading activity are going in the opposite direction, and much more, right? Order flow really opens up a whole range of new forms of analysis for many traders. And it's confusing trying to figure out what's happening on the dome, right? You have aggressive sellers selling to passive buyers. You have aggressive buyers buying from passive sellers, right? And again, order flow in a nutshell is about understanding what the aggressive traders are doing in the market. But if you don't know what to look for, like I said, it's kind of pointless to stare at it. Some people say, well, yeah, I'm going to, these prop firms will say, well, I'll sit you down in front of a dome for 3 months and you either get it or you don't. Well, why don't you get the training for it? I mean, it's not like things are going to come naturally to a lot of people. Some people think, well, I'll just sit in front of the dome and watch it for a year. I mean, honestly, do you have a year to spend watching a dome? Honestly, I'd rather bang my head against the wall. I've watched a dome, since electronic trading started back in the early 90s, and honestly, it's boring. Watching trying to figure out what's happening, because what happens is you turn your head away, get a drink of water, or look at your phone, and you miss something. Okay, so I just find it more useful to have an order flow chart, a volume footprint chart, to understand what's happening in the market. Right? To me, it sort of gives me a sort of a step back and being able to sort of put the pieces of the puzzles together. Now, from the time and sales in the dome, when you organize that data, it allows you to see things in the market. But there's three key points of order flow analysis that stems from these three data points. The delta, which is the difference between the aggressive buying and aggressive selling in a bar. The point of control is the price level in the bar with the most volume. And lastly is imbalances, is when you have aggressive buyers outnumbering aggressive sellers by a certain ratio. Usually it's 4-to-1, but it's up to you to choose your ratio or more, and vice versa, right? So you could have buying imbalance, you could have selling imbalance. Now, just really quick, delta is the net difference between aggressive buying and aggressive selling. Aggressive buying registers as +1 in the delta. Aggressive selling registers as -1 in the delta. Now, every bar has a delta. It can either be positive, generally means aggressive buying was in control. It could be negative, which generally means aggressive selling is in control, or it could be zero, right? Delta could just land on zero. It could be evenly matched. Sometimes people think, well, delta zero must mean something. No, it's just coincidence. I think in all my analysis, whenever I see a bar that has zero delta, don't read too much into it. And the strength or weakness of the delta gives a trader clues as to what's happening in the market right now. So delta, okay, this is yesterday, and almost all the charts I'm showing you are from yesterday. I got a few from this morning, and this is a 5-minute E-mini chart. And yesterday, right, we had that nice sell-off, okay, and you can see here, right, just after the cash open, right, 8:30 is the cash open here. You're seeing mostly negative delta. You got one bar with positive delta, but minus 900, minus 360, a bar with positive, minus 1600, minus 200, minus 3000, minus 2000, then a bar with positive 1000. Overall, since the cash open, delta has been negative, right? There's been a lot more selling than buying going on. So what do you think the market's doing, right? Sellers are coming into the market at these prices, at this 34, 26, 27, 28, 29 level, right? Buyers are happy thinking, hey, we're going up, right? Just as the market seems to have been defying gravity all this time, but it's actually not. sellers are taking this opportunity to sell at these high prices. You'll notice, right, we're not really going higher. We're just sort of going sideways, right? So, there's, even though there's buyers here coming into the market, working bids, these sellers are like, oh my gosh, this is a great selling opportunity, selling over 1,600 contracts more than buying in this bar, over 3,000 more in this bar, over 2,000 more, right? Then the selling it just sort of dries up right here. You got a bar positive delta of 1,000, but the bar is can't even go any higher, right? Than your swing high here. And then the delta, you can see, just turns very strong negative, minus 254, minus 2,000, right? As we take out that swing low and the market just drops, boom, right? We sell off quite nicely. It was a 50-point sell-off yesterday. Now, imbalances occur when aggressive buyers outnumber aggressive sellers by 4-to-1 or more, or vice versa. Okay, so you could have aggressive sellers outnumbering aggressive buyers. Okay, and when looking at the actual volume trading in the two-way auction, a trader can see if there's more aggressive trading occurring, right? But you have to look at a footprint to see it. You're not going to see it on a dome, because on a footprint it will print a certain color, right? On a dome, it's just gone, right? And forget about looking at it on time and sales. Most of the time, the two-way auction is trading in relative balance, right? But one of the signs of a market starting to move in a direction is when there are imbalances present. So, for example, again, this is yesterday, cash open, right? Cash open, okay, we got a big dump of orders coming in because it's cash open, it's Monday, all right? So I'm not too concerned with the first few bars generally of the cash open. But, okay, so, we got some buying imbalances there. I won't overlook that. Can't just say it didn't happen, because it did happen, but market doesn't go anywhere. Next 2 bars later, bar with a lot of selling imbalances. Okay, but then the next bar doesn't go anywhere. We've got this green bar here with about 7 buying imbalances. Yeah, okay, let's see what's going to happen. The market, next bar comes up, starts trading higher. Okay, that's a good sign. Next bar, even higher. Okay, that's a good sign. But if you're watching the delta, it's still negative. It's negative. It's negative. What you want to see when you're seeing buying imbalances come in, you want to see the next bars follow through, right? You want to see positive delta. You want to see more imbalances. You're not seeing that. Then you come up here to a swing high. Then here, this bar, you've got a couple imbalances. 2 imbalances, honestly, is nothing to get excited about. And we're just going sideways, but we do got some strong negative delta. Then this bar right here, right? We break down through that cash opening low, right? The initial balance. We got about 7 imbalances in here, right? You got strong negative delta. That's what you like to see, right? Next bar also starts trading lower, right? It takes out the low of that bar. You got some more imbalances. And you also got negative delta, right? And then, the market takes out the low, takes out the next low, and sells off 40, 50 points, right? So that's how imbalances can clue you into what's happening in the market. Now, point of control is the price level in a bar with the most volume. And the price level with the most volume is important to know because it's a balance area in the bar. Now, a lot of traders think, well, volume is not important. Nah, I don't care about volume. But think about it for a second. Do you think a price level that trades 20 contracts should be treated the same as a price level that trades 2,000 contracts? No, it shouldn't, right? And when you're getting into things like exhaustion, it's going to be very, very revealing to you as a trader by watching the volume, right? Not all prices are created equal, right? Not all traded prices are created equal. A high can trade 1 contract and then come off dramatically, or it can trade, its normal order flow there and just sort of go sideways, right? So volume is important. Don't let anybody else fool you. So point of control, generally as the market starts moving higher, right, point of controls will migrate higher, right? 1, 2, 3, 4, 5, it's going higher, right? Then you sort of get into this area where it's going sideways. Point of controls sort of line up here, 1 higher, 1 lower. But as the market starts selling off, we got a point of control here at 27, then another one here at 24 and a half, another one here at 16. The point of controls are migrating lower, right? And what's important to notice is these point of controls are what we call virgin point of controls, right? They haven't been touched in the next bar, right? They're sitting there, right? Next bar, also lower, hasn't been touched. And again, that's another form of analysis. I'm not going to get into it right now on this presentation, but it's something that as a trader you have to pay attention to. So again, this line here, 34.17, is that low of the cash opening period. You call it the initial balance low, takes it out. Right, got a lower point of control, just sort of rotates around, and then boom, lower point of control, lower point of control, lower point of control, lower point of control. So, that's how you can use point of controls, right? Keep you on the right side of the market, right? If you're short, right? Say you're long, right? Say you got long earlier, right? Off of these 2 point of controls, or these point of controls migrating higher, right? And you're long somewhere in here, 28 or something, and then it's point of control 1, 2, 3 point of controls lower than your entry price. That's not a good sign, because what's happening is these lower prices are being accepted. Then you can see how it starts breaking down lower point of controls, lower point of controls, lower point of controls. Just as, if you're getting short in here somewhere, around the 34.10 and point of controls are still lower, that's good, rather than being long up here at 34.26 and the point of controls are coming in at 34.25, right? You want to be short in those conditions. You don't want to be long from above the points of control or above the value, right? You want to be short above value or short above the points of control. So now that you understand how to start using the data points of delta, point of control, and imbalances, it's time to take order flow analysis to a step further, okay? And it's part that I call advanced order flow analysis. Now earlier, I talked about delta, point of control, and imbalances. With those pieces of data, you can start to see things like current value, market weakness, support, resistance, sweeping, imbalance, exhaustion, aggressive trading, divergence. Now, one thing to remember when you're looking at order flow software, it's not all created equal, right? That's why I created my own. Now, you don't necessarily need my Orderflows Trader software to see what I'm about to show you in the order flow. Using software, though, that allows you to see these market conditions just makes your trading easier, right? It's a personal choice. Sometimes people ask me, Mike, should I use your software or should I use this other software? Well, it's really choosing a software that you're comfortable with, and more importantly, what the software does for you, right? I'm all about making things easier for myself. That's why everything in my software is a tool to help me initially first, right? I mean, it's also to help traders, but I trade, right? This is the software that I use for trading, and what I put in there is how I view the market, what I'm looking for in the market. A lot of people get interested in order flow. They watch videos on YouTube, or, well, there's not really many books on order flow except mine, but, they want to get involved in it, but they don't know what to look for. And that's why having a software that makes the order flow, does the order flow analysis, just makes life easier for you. Now, value. Okay, what I want to talk about now is value. Value is measured as the price at which buyers are willing to buy something and sellers are willing to sell that something at. Okay, that's what value is. That's how you put a price on something. You figure out what its balance is. And the value area, right, if you're familiar with market profile or volume profile, you understand that's the area which the majority of buyers or sellers are happy to do business at. Usually it's like sort of the 70% of the volume for the day is, the volume profile for the day is that area. They would consider that the value area. And again, most traders are familiar with the value area in terms of market profile or volume profile, but what a lot of people don't know is you can view the value area on a bar by bar basis, which is going to give you insight into volume analysis on a bar by bar basis that many other traders are just flat out ignoring, right? Everyone always wants to talk about price action. Oh, I'm following price action. But really, what they should be watching is value action. And value can be hard to see to the untrained eye, right? So this is just a normal footprint chart, okay? But again, a lot of traders think, well, I could just put I could draw a profile for each bar, right? But honestly, that's going to get very messy, especially if you're trying to watch the order flow. I used to have a chart with a screen like this showing me the value area for each bar. Um, and honestly, I'm going back and forth. I was getting, I was missing things, honestly, that I wanted to put a value area on a footprint. So again, it's nothing fancy. It just puts a box around the value area, right? The points of control are still there. That's the area with the most volume traded in the bar, but the value area is where 70%. Some people say, well, it should be 68. You can change that, right? You can go to the settings. You can change it if you want to do it to 68. But honestly, it's not going to make much difference between 70% and 68% generally. But again, it's up to you what you want to use. You can adjust that. So it's easy now. I can see where the value area is in a bar, right? And that's important because now I understand is value, is the price, what people perceive the price of the market, is that going higher or is that going lower? Well, people say, well, can't you just look at price and determine, are we going higher or lower? Well, the reason I look at value is because I want to get a vision into the market before price starts moving, making a move higher or lower, right? You can see here, right? We broke away from, the 20, the what 24, 25, 26 area right in here and just dropped, 20 points, right? I don't want to be getting short down here at 16 or 14. I want a clue up here when we're still trading 23, 24, 25, 26, as opposed to 10 points later, right? That's how I'm going to get my edge in the market. And knowing where value is trading is going to show me that. So I can see here, yeah, the market's going sideways. Okay. But I know I got overlapping value. I've got 1, 2, 3, 4, 5, 6, basically 6 bars where the value is overlapping. Okay. Then I got a little gap in here. Okay. So that's a sign that, hey, you know what? We're starting to come out of this consolidation. We're putting in a lower value area in here, right? Between, what is that, 25 and a half and 23 and a half, right? So then the next bar, okay, so I know that we're starting to trade lower, okay? Now, a lot of people, what they'll do, they'll say, well, this is my, opening range, this is the cash open here, or they'll draw a line from like, 27 and the slow here at 17 and a half and wait for a breakout. Okay, well, what happened here, right? We broke the value area high, or not the value area high, we broke the opening range high here and then it just went sideways. Okay, so if you're long from in here, that's a bad long, right? Because the market is just, you get in and it just sort of sits there, rotates sideways. But look at this, you have this gap in here, right? This is an E-mini 5-minute chart. But again, whatever form of analysis, if you're looking at a range-based chart, it's the same thing. Looking at a time-based 1-minute chart, or a tick-based chart, volume-based chart, you'd be looking at for the exact same things to happen. So you have a gap in here. And the next bar, right, we open up, we trade back into that value and start rejecting it, right? That's your time. Say, hey, you know what? This is my shorting opportunity here rather than waiting for the market to break down here at 17, right? Break this low, right? Because what happened is we opened up below value, traded back into it, starting to reject it and trade lower. That's your time to get short. That's going to give you an extra 5 points on this trade before the market falls over. Now, that's value, right? Understanding where value is trading in the market is going to help you understand what's happening right now in the market. Again, that's what I'm talking about. Gets you as close to the market as realistically possible for making good trading decisions. Now, market weakness is something that I want to talk about, and it occurs when buying stalls or recedes on a move up or selling stalls or recedes on a move down. Buyers are getting lesser and lesser on a move up, means there's less chance of the move continuing higher. Okay, so imagine the market's going up, but then there's less people buying. Do you think the market's going to keep going higher? No, it's probably going to stall, go sideways, and fall over because everybody that's wanted to buy is already bought, right? There's no one left to do the buying. Same thing as markets selling off. Sellers are decreasing on a move lower. Who's going to help the market to move lower when the last seller has sold? Well, nobody. There's nobody left to sell. And again, if you're watching a normal footprint chart, if you know what to look for, you can sort of see it in the market. Okay, so always take what's happening in the market in context. Put it in context. Always got to be asking yourself questions. I always, with my kids, with their schoolwork, I tell them, let's play a game. What do we know, right? When they're sort of stuck on their homework, I go, what do we know? The same thing applies to the markets, right? Okay, you're at your high of the day. This was the 22nd, right? This was last Thursday. Okay, market is at the high of the day. Okay, so what can happen? One, yeah, we can go higher, or two, we can go sideways, or three, we can sell off. So what I'm going to do is I'm going to start looking at the delta. Okay, I could look at value also in a second, but for me, the delta is starting to be kind of revealing. It's kind of going both ways, right? You got positive, negative, positive, negative, positive, less positive, even less positive, then negative, big negative, then negative, 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 and the market sells off, um, a quick 20 points. So what do you think is going to happen? People say, well, you still got positive delta. Well, you got positive delta. You're a few ticks off your high in this bar, right? Delta has decreased from the bar before. It was 1800. Now it's only 500, and it's a red candle. That's not a good sign. Then the next bar, it's got a lower high, a lower low, and even smaller delta, right? 346. And then this bar here, again, another uh, lower low and lower high, and big negative delta. At this point, it should be obvious that this high, the market is weak up here. There's no more really buying interest. Buyer beware. Buy at your own risk, because what you saw here, you saw the buyers in the delta, the aggressive buyers decreasing, getting weaker, and then boom, sellers took over, right? And then we sell off from 32 all the way down to below 10. But really, the signs were here in the delta. Now you could also look at the points of control. You got a point of control. Next one's lower. Next one's lower. Next one's lower. It does pop up here. Okay, we'll see. Have to see what happens in the next bar. Next bar lower. So even if you're getting in, maybe you say, I'm not convinced with this delta. When you look at the points of control coming in, they're lower, right? Again, value areas, you can see value areas generally migrating lower, except for this one green bar. Then you got that big gap in there. By that point, you should already, the fact that we couldn't trade back up into the previous bar's value area is a negative for the market. And obviously the market sold off again, even if you got in very late, right? Say you got in late here at 24, 25. Okay, realistically, you should have been in any of these two bars right here, somewhere around this yellow line, which is the opening price for the day. Now, having software that will highlight to you when there's market weakness is a good thing, right? This is, again, I just showed you how to look for it on a normal order flow volume footprint chart, but on my order flow chart, we put these arrows, tell you, hey, you don't miss this. There's market weakness here. Now, does that mean that anytime you see an arrow, it's automatic buy or sell, right? If it was bullish, it would appear below in a blue color. No, you still got to take things in context, and you still got to pull the trigger, right? I'm not a big fan of automating everything. There's certain things I like to automate, but as a trader, you got to trade, right? You want to put the pieces of the puzzle together. All the Orderflows Trader software does is analyze the order flows to you and serves it up to you on a platter, whether you want to take the trade or not, based on what market context, right? What's happening in the market. Now, divergence in order flow occurs when aggressive trading and price go in opposite directions. So when a new or equal high is made, aggressive selling, not buying, appears. When a new equal low is made, aggressive buying, not selling, appears. So, for example, yesterday, okay, again, 5 minute is the E-mini chart. We hit the low of the day down here at 56. And what do you see, right? You have a divergence, right? That's this green arrow, right? You got positive delta on the low. So aggressive selling on the way down, positive delta down here, right? All negative delta on the way down at each lower low. You hit this new low, you got positive delta, right? The market started turning around, right? It turned around because aggressive buyers started taking control of the market. And you see how the market started moving back up. But just taking divergence by itself is not always a good thing, right? You also want to be watching what's happening next in the market, right? What you need to follow through order flow to confirm everything that's happened. Yeah, I have a divergence. It's telling me, okay, Mike, pay attention. This market could start to rally because now we're starting to see aggressive buying. But I still got to watch what happens in the delta. So we went from 95, 558. That's good. 1800. Yeah, that's very good, right? So aggressive buying is getting stronger now. Okay, it's probably a safe trade to say, yeah, I could probably get long in here, right? And if you got long, that was a great opportunity to get long. Next thing I'd be watching the imbalances. Okay, is the next imbalance higher or lower? Right? If it's lower, it's not a good sign. If it's higher, that's a good sign, right? If you're getting long, or sorry, that's the point of controls. You also want to watch imbalances in the bar, right? The aggressive trading happening in the bar, and you can see there's 1, 2, 3 buying imbalances in here. Nothing in the next bar, but the next bar later, you got also 3 imbalances, so that's good, right? But again, just because you have a divergence doesn't mean the market has to react accordingly. You need order flow that flows to be conducive, right? You need, just because you have a signal, say get long or get short, it doesn't necessarily mean the market has to do that, right? Because you need other traders to also be getting long or getting short. Yesterday, a little bit earlier, right? I showed you yesterday's rally, but there was a time yesterday that I want you to see this, right? We have a buying bullish divergence right here in this circle. But if you're watching, again, like I said, you got to watch what's happening. Okay, well, we got big buying coming in, positive 2,000 in the delta. Then the next bar, it's still a strong positive delta, 1,600. Point of control is higher. You don't have any imbalances happening in this next bar. It's a doji bar, closes where it opens. This is those bars that, as a trader, really make life difficult, right? Then obviously the next bar, again, knowing where the value is, right? We open up in the value and just start moving away from it. That's not a good sign if you're long off of a divergence or anything, right? If we can't hold that value or get through it to the other side, and if you're long here, that's not a good sign. Instead, we open up in the value, quickly move out of it. That's not a good sign, right? So, POC obviously is going to be lower, right? If we can't even get back into that value. So, don't just think that, oh my gosh, I got a divergence, I got to start, I got to get long or I got to get short, right? You got to put it in market context, right? And what you're seeing is first bar, strong delta. Next bar, yeah, it's a strong delta, but it's weaker in the sense compared to the previous bar. Obviously, the next bar is even weaker, 10. Okay, market came right back up in the next bar, but then it just went sideways, right? That's not what you want to see. Take that relative to this bar here. It was positive delta, then stronger, and stronger, right? You want to see strength coming into the market, not that weakness like you're seeing here, where it's just the buying is getting weaker and weaker. It pops back up, but then it gets weaker, stays weak, and then just goes sideways on you. This was this morning, okay? This was the high of the day at 34.10. And there's actually a couple imbalances. This was the first one here at just after 6 o'clock this morning. There was one a little bit later around 6:40. But if you're looking at this, right, we hit our high, got your divergence, and you see negative deltas, minus 62, minus 159, minus 91, and then some kind of small deltas, 22, negative 65, positive, minus 15, 4, 72, 83, just going back and forth. But look at that. Even though it's, relatively small deltas, it's mostly negative, right? Yeah, obviously we sold off nicely from that 34.10 high, but the same thing happened early, like a little bit later. I didn't screenshot it, but about a half hour after this, same thing, right? You hit the divergence on the high when you hit 34.10 again, and if you're just looking at the delta, you would see that it's overall negative, right? Before the market sort of puked out, right? And again, in here, this is 6 in the morning. You're going to get small bars, so you're seeing buying imbalances, selling imbalances. It's a lot clearer during the trading day, the cash session, what imbalances and POCs mean. But on bars that just have, trading 3 or 4 price levels, it's kind of, honestly, it's kind of difficult to put together meaningful point of control analysis. Now let's talk about how to find edges and opportunity within the order flow. Okay, so what separates winning traders from losing traders is not having an edge, right? What is an edge? It's a piece of information that other traders don't have, or something they don't see happening in the market, right? It gives you that order flow gives you that edge because you have that information other traders don't have. For example, back when there was trading floors, on the CME, CBOT, the reason why one of the reasons why the exchange memberships were so expensive is so people could stand there and see the order flow coming into the market, right? It gives them an edge over somebody that's sitting in an office looking at a screen and doesn't have. They're seeing, Goldman's or Solomon Brothers broker checking the market, then start selling a little bit. And they're thinking, well, if he's selling a little bit, maybe he's got more behind it and they get short, things like that. Now, order flow, one of the edges that I find very useful is recognizing things when a big order hits the market. And people say, well, yeah, I can see that in imbalances, but there's another thing you can look for. It's called a market sweep. Now, what is a market sweep? Okay, so for example, here, this market's trading 33.39 even at 33.39 and a quarter offer. A big trader is bullish, right? And he's aggressive, right? He has 1,000 contracts he wants to buy, maybe because he knows, stimulus is going to pass in a couple of minutes. Okay, so I'm gonna buy now, right? So what's he going to do, right? He's going to try and finesse it. Well, I'll work some on the bid. I'll buy 25 now, and no, he was okay. I know something's going to get passed, stimulus or whatever. I want to get long, buy 1,000, right? He'll just buy everything up to a certain price, right? He'll buy everything up to 33.40 and a half, and he's not concerned with, well, I bought 98 at this price, 133 at that price. He's just concerned with his average price, right? When you're trading big size, you're really all concerned about is your average price. So what's he do? He buys everything up to 40 and a half. His average fill is 39.85, and all of a sudden the market's trading 40 and a half. He's already in the money. Okay. Now sometimes you can see that on a dome. That's if your eyes are glued to the dome, right? And you notice it. But on a footprint chart, you can see it pretty easily, right? You can see what's happening, right? Someone swept through the market here. This was this morning. This was when we're trading 93, 94. Big seller came in, just whacked the market, right? And they sold the 125, the 115, the 159, even turned it off for 144, right? And then the market started trading lower. It came right back up into that area where the big seller was. Maybe the guy came back, sold some more, and you had a nice sell-off. But again, if you're trying to watch it on a dome, you're not going to see it, right? And a sweep, think of it, is someone who's buying the current offer and the offers behind it up to a particular level, or sells through the bid down to a certain level and turns the market offered. So again, just to reiterate, if the market is 39 to 39 and a quarter, what someone's going to do when they sweep the market, say they'll sweep it up to 40 and a half. So they'll buy everything in there and turn the market 40 and a half bid. All of a sudden, you'll see all of a sudden the bid's filling in down here. Market's 40 and a half bid at 40 and three quarters. Conversely, if they sweep the market to the downside, they sell everything from 39 down to 37 and three quarters, turn the market offered right here. Also now the market's 37 and a half at 37 and three quarters offered. People say, well, that's stupid. Why do they do that? Again, unless you've traded at an institutional level, a lot of traders, they don't comprehend that. People say, well, why, the market's trading 39 and a quarter. Why would I want to pay up to 40? Well, because if you're a big trader, your order is going to impact the market. You know that the market's about to move. You just want to grab everything as possible, as soon as possible, before the liquidity dries up or the market starts to move. So if you're looking at a normal footprint chart, it's a little difficult to see, right? You got to know what to look for. And again, having software that's going to draw it on there, and as far as I know, my software is the only one until people start taking my ideas again and putting them into theirs, is it allows you to see where it's happening, right? There's a sweep up here before the market sold off 8 points. Then here, before the market rallied. right? But again, you have to know what to look for. You can stare at a dome, try and figure it out. Oh my gosh, was that a sweep, or did the orders get pulled, or was there lack of liquidity or something? This is euro currency, right? The chart I just showed you was E-minis. This is euro currency. Okay, so it again doesn't matter what market you're looking at, doesn't matter what time frame you're looking at, whether it's a 1 minute chart, a 1 5 minute chart. You're probably not going to see it on a 15-minute chart. Honestly, if you're looking at order flow on a 15-minute chart, there's certain things you could look for, but generally, um, if you're looking at a longer term chart, like a 15-minute chart, you're looking for areas where the market can retrace to rather than moves happening. But this is a euro currency, right? Look at it. Can you decide quickly where it is? Here it is, right? Have software that's going to highlight that to you. Here's gold. Where are the traders? Where are these big traders running through the market? Right there. So market sweeps and stacked imbalances honestly often overlap because they're both very aggressive market behavior. Now, where it gets juicy is when a sweep occurs and there's no stacked imbalance, right? Here, there's no stacked imbalances in these bars, right? Earlier, um, here, well, on this euro currency, this was a stacked imbalance over here, but the sweep led the stacked imbalance. And obviously on this buy down here, there's no stacked imbalance. There's imbalances, but they're not stacked on top of each other. So you would have missed that if you're just looking for stacked imbalances. Now, point of control, right? Point of control is something that's very useful to a trader, right? And it's the price level in the bar with the most volume. And people have asked me in the past, does it have predictive value? Well, I've done a lot of time on research of points of control, right? Because every bar has one, so there's got to be some use for it. And whether you're trading futures, whether you're trading stocks or forex, and even Bitcoin, cryptos, um, every bar is going to have a point of control. So the POC slingshot is actually an indicator we programmed into the Orderflows Trader, and it highlights POCs that matter. POCs, points of controls that can signal potential directional moves. And again, I've done a lot of research into this, and I've identified certain points of control along with price action relationships. And I found that when a POC acts a certain way relative to previous bar activity, the price action, it can be bearish or bullish. Okay, now every bar has a point of control, right? You can see that's the area with the most volume, right? That's the gray area in each bar. But which ones matter? Right? And this is what our software does. We'll highlight the ones that matter. So you can see instantly rather than saying, does this one matter? Is this one important or not? Or is this just a normal point of control? Right? Because, honestly, look at this whole chart. There's points of controls, but they don't all matter in a sense. Ones that matter, that are especially important, that you should be paying attention to, are going to be highlighted. Again, this is gold here, right? Well, okay, well, which points of controls are important? I don't, if you're looking at it, unless you know what to look for, you're not going to see it. Boom, right there. And look at that, right before the move, boom. These are those bars from the trades from '06 down to '02 that you want to get in on, right? You always look back, God, if I just sold somewhere in here and caught this bar, I'd be done for the day. And that's what having good software will do for you, right? It'll make your trading a lot easier. Now, this is Apple. Okay? It's Apple stock. And you can see here, bearish point of control. This is a POC, this is the POC slingshot setup I'm talking about. Market's going sideways, and then boom, you get the bearish sign. Imagine you're getting short up here, 115.40. Next, this is on a 1 minute chart. We sell down 50 cents, go sideways, boom, another bearish sign down here, and the market just sells off nicely. This is this morning in the E-minis, right? This was about 2 hours ago, right? We had this nice bearish POC coming in right here, right? Right before the market sold off into new lows, right? It's nice to have software that will show you that stuff. Now, earlier I talked about value areas in a bar, and like points of control, every bar has a value area, but certain value areas are going to be more important than others. So, which value areas matter, right? again, I was talking earlier in this presentation about, looking at the gaps between the value areas. That's one way, but there's other types of value area analysis that are very revealing. And you can see here, right? You got red, right? What we do is we color it red if it's bearish. We color it blue if it's bullish right in here. You can see bearish, bullish, right at the low of the day. You have a nice bullish one. This was that one where you had the divergence as well. Again, this is on a 5-minute chart. Market moved up nicely. Again, if you're looking at a normal bar chart or a footprint chart, trying to figure out which value areas are going to be important is kind of difficult. But boom, having it highlighted to you is just going to make your life a lot simpler, right? Imagine if you're trading, imagine you're looking at a dome, right? If you're a dome trader, right? You're interested in order flow because you trade on a dome, having a footprint chart on a screen next to you saying, hey, you know what? I've got this bearish signal here in the order flow. Okay, well, you know that, okay, yeah, I could stack some offers in the order book if we trade back in there, get short, boom, and then it starts breaking away. Then you got this big gap of value right here, go sideways, boom, another gap, right? This is how you're going to get more out of a trade, by watching what's happening in the value. It's not just about, okay, I want to get short, I got to automatic take profit or stop. Watch the order flow, right? If you're short in here at 24, then you got to take profit, whatever you call it, I don't know, 16 or something, and you see, well, I got a gap here. I got a gap here in the value. Well, you know that this market value is migrating lower. Chances are we're going to go lower. You get more out of that trade, right? That's how you use order flow to help you stay in winning trades longer, or cut losing trade, or cut trades that are just stalling out on you, going nowhere. Cut those earlier. Again, this is crude oil. Okay, we're at a low of the day. We got some divergences, which is good, right? You got some positive deltas. It's kind of worrisome in here. You got 1, you got 97, which is decent, but it's less than here. But points of controls are moving higher. But value area is bullish. It's a nice strong value area. So you start putting this together. Points of controls moving higher. You're seeing some buying imbalances. You got a nice bullish value area. You got divergence. Yeah, I could get long. But where do I get out? Well, here, you got a sign in the order flow. You got the bearish value area right in here, and the market sells off. Actually, we sold off, took out this low, and he actually made new lows yesterday. Buns, this is this morning. Value areas. Which value areas matter, right? This is a PLC, bullish PLC slingshot right here, but right before it, you had a nice bullish value area right here. We call it the EVA, the extended value area, right in here, right? And boom, up to new highs. NASDAQ this morning, this is a 30-second chart, right? For you quick draw traders. Boom, bearish, turns around, comes bullish, back up, a little bullish move up here. So, it doesn't matter if you're using, 30-second chart, a 1-minute chart, a 5-minute chart, a range-based chart, volume-based chart, tick-based chart, you'd still be looking for the same things. Here's Apple, 1-minute chart, bearish value area, we sell off, boom, we stop here at a bullish value area and make a nice move up. So this past hour, hopefully you'll agree it's been time well spent, and hopefully you've learned something, how you can apply order flow, seeing how you can apply order flow to your trading. But honestly, there's a lot of other topics I wanted to cover, but I can't really do it in a quick 60-minute training session. But I have a special offer so you can get everything you need to know about order flow. And if you act fast, I got a very special deal for you. So you're going to be excited about the Orderflows Trader, right? The Orderflows Trader 3.0 runs on NinjaTrader 8. Okay, it's not available for TradeStation, ShareCharts, or any other trading platform. I use NinjaTrader, and it's stable, right? I like NinjaTrader a lot because I find it easy to use. So what the Orderflows Trader is my footprint chart with 17 pre-programmed order flow tools. I explained a couple today, like the value area, the slingshot point of control, the market sweep. Those are just some of those pre-programmed order flow tools in there. And it's really very easy to set up, right? You don't need templates or anything because the defaults are my defaults, which is set for your standard 1 minute E-mini chart. Now, if you're trading something like mini Dow or NQ, you might want to change one or two settings, but the default is good enough for you to get started and use it. You don't really need to make many changes. I hate the software that you buy and you got to spend 6 hours trying to make heads or tails of it, right? I want to keep it as easy as possible for you. And normally I sell this for $8.99 on my website. Now, what the Orderflows Trader 3.0 does is it takes my knowledge of trading order flow and puts it into a program so you can see what the institutional traders, what the big traders are doing in the market, right? It's kind of like having me sitting next to you explaining what's happening in the market, saying, oh, there's some aggressive activity here, there's price exhaustion here, there's, divergence or there's imbalance, etc. But having order flow software is one thing. Right? You still have to know how to use it in the sense of know what to look for in the order flow. So I don't just give you the software and say, here it is, there's the software, just go try and figure out order flow by yourself, right? I give you a lot of education on how to trade with order flow. And for example, today you're going to get access to the order flow trading course, which I sell for $297 on my website. It's 20 lessons, it's 15 hours of instruction on reading order flow. You're going to get that for free. And also, a few years ago, I created my order flow inner circle, and there's 56 videos in it. There's advanced order flow analysis. I don't want to say tricks, but nuances is probably a better term, and tips that you can use in looking for the order flow. And just this series of videos, I normally sell this for $4.97. You're going to get it for free. Okay, this is the Inner Circle video series. So you add that up together, you got the software, you got the training of the order flow trading course, you got the Inner Circle video series. That's almost $1,700. Right, that's $1,693. Now, it's one thing to learn from videos and books, right? And it takes discipline, it takes commitment. I see that with my kids doing their e-learning. It's hard to stay focused, when you're watching a video or watching a teacher like my kids do. And, teacher, honestly, my teacher just here, watch this video. It's more helpful to have live training where you can ask questions, participate. And for the last 2 years, I've been hosting live user training sessions for users of my software where I drive home what I saw in the order flow over the past week or, different ways to use the software that you might not have thought of. You could ask your questions about areas you're struggling with in your analysis of the markets. And all the sessions are recorded, so if you can't attend, you can always watch the replay. So the archives now has, I think 93 or 94 episodes, 92 actually I wrote here, but I don't have last week's, and tonight is Tuesday, so we're having another session tonight that you can watch. You can watch them at your leisure, right? And you can see here, there's a whole page with all the videos listed, okay? And the thing that drives me nuts is I see these people selling software out there, these gurus. You buy my software for $1,000, $2,000. Now you can join my trading room for another $200 a month. For what? You just dropped $1,000 on their software. They darn well better, have some sort of free training that you can go and ask questions on how to use their software. That's why I do these weekly live sessions, because I'm always there, right? I'm always there to answer your questions. Now granted, if it's a Christmas holiday or something, I might not be on, it's closed, we don't do it. But, over 94 sessions over the last 2 years is pretty consistent. And, it's free. It's a free resource for you, right? So you start adding it up, the software, the training, the videos, the weekly live training, it's pushing $2,000, but you're not going to pay that, right? You're just going to pay a one-time payment, right? It's $749. I hate these softwares that charge you recurring, payments. Microsoft Office, I pay like $10 a month for. I'm like, why can't they just, simply buy it? You used to be able to do that. Now you can't. But, I don't want you to keep paying and paying and paying, all right? It's just a one-time simple payment. Now, granted, you'll have to pay your data fees and your NinjaTrader fees. There's no way around your data fees. You still got to pay them. But, as a trader, you get it for a reduced price of depending on which exchanges and which data feed you have, it you can get as low as like $7 a month if you're just watching mini S&Ps. So go to orderflows.com/oft3.html and it'll take you to the page. But again, don't just take what I say as, oh my gosh, Mike says I should buy it, but what other users have been saying, right? Sheila says, your Orderflows Trader software is very helpful, remarkably helpful, because I can clearly see now what's happening in the market, right? Ziad says, if you really want to trade properly and understand what on earth is happening in the markets, Orderflow is the path forward, right? And Mike's experience and explanation, it clicks, right? That's why I spent that time talking about my background early on, is so you know that I come from a background, a real live trading background where I traded for a living. That's what I did to pay my bills, pay my house, pay my car, pay my food. It wasn't like, well, I was working, I'm an engineer and I'm trading at nights for a couple hours a day and this is what I have. No, this is how I traded all those years at a very high level, to survive. Now, what you do is go to orderflows.com/oft3. It takes you to this page. Scroll down to the bottom of the page. This is the button. You can see what you get on that page. It's a long page. I don't want to go through it all here, but just click this button to get started, right? This button that says click here to buy now, right? You're going to get, see, it's just a one-time payment of $7.49 to get access to the Orderflows Trader, Orderflows Trading Course, Inner Circle video series, and access to our weekly live group trainings. And it takes you to PayPal when you click on that button, right? I don't get your credit card. I don't want your credit card information. PayPal handles it. Now note, all the download information, the license tokens, course logins, it's sent to your PayPal registered email address. So whatever email you log into PayPal with, check that email for the information. Sometimes people have different emails for different things, right? They'll use PayPal one email and all their normal correspondence on another one. I'm not going to know what your other email is, right? So please check your PayPal email, the email that you use when you make payment with PayPal. And yes, as silly as it sounds, sometimes people are still using emails to log into PayPal that they no longer use. And then when I send the information, it gets bounced back. But just update it inside PayPal, inside of PayPal. But please check your PayPal registered email address, and that's where everything is going to be sent. Now you'll notice here, well, you don't see it on there, but it just takes relatively, for your payment to get processed, it takes a couple hours. So it's not an instant process because we got to go in and create license tokens, course logins, and all that stuff. So you get it relatively quickly generally, but on days where things are busy, markets are moving, it can take a couple hours. So again, it's just a one-time payment of $7.49. Go to orderflows.com/off3. So you got a couple options you can do, right? You can do nothing and stay right where you are, right? And sit there and say, well, yeah, I'm waiting to start understanding order flow, right? And you sit there till you're dead. You're never going to get it. Or two, you could take what you learned today and see if you can do it on your own. Trial and error for the next few months, perhaps. If you're lucky, you'll start to see some positive results, right? But you're going to go down a lot of wrong way streets trying to figure it out on your own, honestly. And worst of all, you don't want to try to figure it out on your own and start losing money in the markets because you think you understand what you're looking at. No, that's the worst possible result. Or option three, you take my hand and allow us to walk you step by step through each part of the process. Skip the trial and error. If you do the work, you'll watch as your life and trading transforms right before your eyes. Right? But again, you still got to put in the work. Right? It's not all served up on a silver platter. I'd like to say, yeah, here it is. But at the end of the day, you're a trader. You got to trade. You got to make the decisions. Now, a special bonus for those that are stuck around here at Investors Expo is I'll give you access to a trading course I did called the Order Flow Playbook. It's a nice course. Right? It's got actually 10 trade setups that are very useful for a lot of people. Normally, I sell this for $297. You're going to get access to this free, but you got to get started now. Go to orderflows.com/oft3.html. I got to put the .html at the end. And what you're going to get the Orderflows Trader, which is normally $8.99. You're going to get the Orderflows Trading Course, which is normally $297. You're going to get access to the Orderflows Inner Circle video series. That's normally $497. You're going to get access to the Orderflows live weekly group training, which is, honestly, I don't know if I put $200 on here. It should probably be more, right? I used to do mentoring for a lot more than $200 for an hour. You can also get access to the Orderflows playbook, which is normally $297. And you're not going to pay the $2,000. You're just going to do a one-time payment of $749. Now, you have to go to orderflows.com/oft3.html. Sometimes people like to find a link for an old version of Orderflows Trader 2.0, which is not completely different. It's the older version, right? This is the new version. Orderflows 3.0 is the latest new version. This is the one we released just literally 6 weeks ago, or 4 weeks ago rather, not 6 weeks ago, 4 weeks ago. All right, so this is up to date, right? And it's got the 17 pre-programmed indicators. Okay, so go to orderflows.com/off3. Now, if you want my book, go to orderflows.com/book.html. Right, make sure you put the .html. Enter your name, first name, last name, email, hit submit. Right, after you hit submit, it takes you to a page where you can download the book. Okay, very easy. So get started. Go to orderflows.com/oft3.html. But lastly, ask yourself. I ask you, what motivates you? People ask you, Mike, what motivates you? Why you still want to work? Why do you want to trade? Well, trading gives me that freedom to do what I want. It gives me the freedom to do what I want with whoever I want, right? For me, my family is what motivates me, right? This past summer, a few months ago, we went to South Dakota, right? As a trader, someone that trades for himself, I could say, you know what, I want to take next week off. Hey, honey, let's go take a drive out to South Dakota. Okay, that's how we do it, right? Like, well, sometimes we plan things, but being able to do that on the spur of the moment, a lot of people don't understand. When I worked in Singapore, there were times where it'd be like Friday afternoon, and markets closed in Asia, and I was still single. One of the guys on the desk was also single. What are we doing this weekend? You got plans? No, nothing. Say, hey, let's go to Thailand. We just go down, hail a taxi, go to the airport, get a ticket, go to Thailand for the weekend. Why? Because we had that freedom, right? We could do what we want when we wanted it, and more importantly, we could afford it, right? Trading has given me that freedom pretty much all my life since I've been a trader. And I'd like to see other people have that freedom, right? It really makes life enjoyable, right? I hated my job sometimes as a trader, but that was the politics of it. The one thing that kept me going was understanding what's happening in the market, because I could just tune everything out, all the politics going on in the office. I could just tune out by watching the markets. So again, to get started, go to orderflows.com/off3. I put the links in the chat so that anybody can just click on those links to get started. And that's all. First thing, like I say, people say, what do I got to do in life? Well, you got to get started, right? And the best way to get started is to get software, get training, and start watching the market, right? So thanks, everybody. Thanks for taking your time off this afternoon. I'm not going to keep you on much longer. I've gone for about just over an hour. Hopefully you found something useful in today's presentation that you can apply to your trading. And, any questions, shoot me an email, mike@orderflows.com. And, if you have my software, I'll be seeing you guys tonight on the live group training session. So have a great day, everybody. Thank you, and bye-bye.